Hi everyone, welcome back to another video. Please like and subscribe, it really helps out the channel. Today we're just going to have a quick look at the market and how it's doing and the recent news, the inflation news that's come out. And then we're looking to one stock that I have sold for, on an average, over 100% profit. I did do some averaging up and down because it had been quite a volatile stock. Apparently, the Fed's favourite inflation gorge shows that price increases remain sticky in March. So this is the core personal consumption expenditure index, which has risen from 2.7% to 2.8% over the prior year in March. I think indexes have taken it with some slight relief that the figures haven't been worse. Just above my head, there's S&P futures are up 0.76%. The Dow near enough flat, and Nasdaq up. But I think Nasdaq's up also because of the good Google results earnings overnight. And again, the Russell 2000 has had a nice uptick there, up 0.5%. But it's just the futures market. Anything can happen on the day. But let's just hope for a nice end to the week after the volatility we've experienced. You see, the S&P 600 was down 0.8%. This is yesterday. And over the past month, yes, down 2.5%, but it's also up 2.5% from its lows. Okay, so the company that I have sold out of is Encore Wire. I held them since 2022 time, so just over 2 years. You can see that I bought during this volatility here in around April, where it's went up 20% over a month, but then a couple of months later it was down 20%, and it was just going up and down. It was this trend line where the stock market didn't know how to react to their earnings, which were always sort of beating expectations. Encore Wire had a big growth spurt over the COVID pandemic. They're a copper wire company, and because of the way the copper price went, their margins increased significantly. What happened in 2022 was there was a reduction in their margins, and the market was expecting these margins to reduce quicker than they actually were. So they were continuously beating earnings per share expectations. So as you can see, from probably an average in one of my accounts of around 120, then it was up 120%, and in another one, I think I bought around 23, but it was up 90%. So I think there was an average return here of, there were two separate weightings in two different portfolios. So there was an average return of over 100%, which I'm happy about, but of course over a relatively short period of time, and especially how the rest of the market has been. But I did want to hold because this was a 20% holding in my portfolio, and I think there could have been a lot more growth had it not been for the buyout. Because the buyout's only been provisionally accepted, but as I said, I have sold out the stock. If the shareholders rejected the proposed buyout, I would be interested in coming back into the stock. You see, the sales revenue growth was exceptionally high. There you go, 2021, 100%, and 22, 16%, although reduction in 23. I won't go too much into this stock because, as I said, they have now been sold. But just in case they do reject the offer, this might be one that you want to put onto your watch list. Big share buybacks to 21 million in 2019. Shares are now just 17 million, but I think that figure is about 15 million, so another 2 million in the last year. The balance sheet is incredibly strong. Huge cash position of $560 million on a market cap of just over 4.5 billion. So there is plenty of room for these share buybacks, and at the same time they're increasing equity nicely. No long-term debt. It should be noticed they have zero debt and have always had zero debt. The shareholders, equity, more than doubling. So they are ramping up production and in their facilities. They have a one-site facility in Texas, and they're expanding production and moving up the chain to improve margins and profitability further. And as you can see here, 2023, they had earnings per share of 21. This was expected to reduce to 17 this year, but then rebound back in 25. And what really meant that I was still sticking in the stock and believing that the share price could go much further was the fact that also the earnings per share started to be upgraded again. So a month ago there was 16.77, now 16.98. 2025 was the big 17.5 3 months ago to 18 currently. And if you got to listen to the earning calls I did every quarter, you thought they could do better than this because they were producing positive surprises on their quarterly earnings. One other point to note is that they had 20% of their shares are currently shorted. And what had been happening over the last year was there was a short squeeze, which was also propelling the share upwards. And I just felt like if the stock hadn't been bought out at what I think is quite low prices, then that short squeeze could have propelled the share even higher. I mean, I had a personal sell target of around $400. So, although it's good to cash out on a positive position, but especially when there are opportunities in the market. But I wanted a little bit more. So where have I invested? So I've sold out circa 20% of my portfolio. I don't like to stay in cash long, so I'm still making up my mind on a couple of stocks I want to buy. So I decided to put a quarter into the Nasdaq. I was, quite surprised. Hadn't actually looked at the 5-year chart of the Nasdaq for a while, and I presume they were at all-time highs or near enough all-time highs, apart from the sell-off in the last week. But if you just look at, they were 1% higher, but now they're nearly 3% below their November 21 peak. So it is just that, although there's a heavy weighting to their so-called Magnificent Seven in the Nasdaq, there are still, I think, probably a few bargains within that index that are holding it back from getting to those all-time highs. And I know it's still up at 91% over the last 5 years, but I thought I can't pick with Google going up on earnings, Tesla going up, but Meta going down. Personally, I haven't delved into those stocks too much to be confident with which ones will respond positively to these earnings, especially when there has been this big AI hype in their share prices. So I've bought a quarter, so for about 5% of my portfolio now is in the Nasdaq. I sort of like buying the indexes and treating them as sort of a short-term holding some of the time if I'm looking at further individual stocks to hold. Because yes, as I said, I don't really like to hold money in cash for too long. And then I also put another quarter, so 5% into the S&P 600. I mean, now, down 2.8% years to date, or just flicked up to 2.6. I think it might have a slightly positive day today. We'll see. So, I mean, it's been very volatile. Down 5% from the peaks in the year, but still heavily down from the 2021 peaks of 10%, just over for the peak. So, I think the main bargains I'm looking for are within the small caps, and so why not? I might as well buy a bit more of the index, which the actual S&P 600 index is actually my largest holding. I think around 15 or 20%. I will actually do a portfolio update maybe next week or the week after. I think it would just show some transparency in what I'm buying and selling, and show my average my holdings and where I'm up and where I'm down as well. The watches of Switzerland Group I bought a new holding. I did make a video, 2 or 3 videos ago last week on watches of Switzerland and why I think they are a turnaround play. But again, very, very volatile over the last month. Up 7%, up down 7%. I think up 4% again today. So it has been moving up 4%, 5% a day, and also down 4 or 5% a day. It all depends on the noise in the market, the Fed noise, inflation noise, interest rates. As I keep saying in one of the videos, it's all noise at the moment. We don't really know where inflation is going, but we do know one thing, that interest rates expectations are keep falling back. I think they're now talking December as the earliest. So I did buy some gold also. I think I'm a little bit to a couple percent down on my new holding gold. It's just a safety net for me, I think, with the current tensions in the Middle East and maybe potentially overhyped stock markets, especially in some of the tech stocks that might potentially create a wider drop in the market. But I just want to have some of my holding between 5 and 10% in gold, just in case the worst happens. I'd also say I did sell out of my FTSE 250 tracker. I do have a core holding in trackers, but then also have a separate where I do keep it maybe in trackers. Maybe it's just a couple of weeks or a few months before I then purchase an individual stock. So Mr. Cooper Group did have a negative day yesterday. I was up 0.14% today, but I thought, I really like their earnings. I did make a video, my last video, where I went through the balance sheet of an income statement and future projections of Mr. Cooper Group, and I really did like that. Do like them, and so I have bought into them, but it's just a small position. My FTSE 250 tracker was only a 3% holding, I think. So yeah, it's a starting position. One last thing before we wrap up this video, just having a look at the swap rates. So the US swap rates they're still rising and have been rising fairly rapidly over the last month. So a month ago, just the end of March, we were looking at 4% dead on, now up 0.5%, 4.5%, which takes us back to levels last seen in November time. So if we scroll out, we can see where the peaks were around the trust time, whether it was her fault or not, who knows. This is US swap rate, so 5.5% ish, probably right at the top, yeah. And these are the elevated positions, and we did go down to around 3.6% over Christmas and into the early new year. Well, we're 1% above that now, and it seems expectations are that we aren't going to get a rate cut anytime soon. Make of that what you will, but if interest rates aren't falling in the US, I doubt they're going to fall in the UK beforehand, or they might fall a few weeks beforehand if they are certain the US, or near enough certain that the US will reduce their rates. But I think we'd be lucky to see any reductions in the UK interest rates before the general election, presuming that's in autumn. But yeah, we'll see. It's just something to keep an eye on, because this will affect smaller caps particularly. And if anyone who's invested in UK house builders will, I think it might be a struggle over the next 6-9 months in their share prices. But anyway, thank you for listening. Hope you all have a good weekend. Please like and subscribe. It really helps with the channel. Bye bye.